panel is embedded finance, where it is now and where it will be soon. And so I'm your humble moderator. My name is Emmanuella. I'm also the CEO of Pennee. I will invite my panelists now who are going to be speaking more about embedded finance, especially in Africa. Okay. So can I invite Temitope, Adeyemi, the CEO of PayU, as one of the panelists. Please put your hands together for him. Also, Segun Adeyemi, the CEO of Anchor. Your hands together for him as well. Fehintolu, the CEO of Credpal. And Dickson, Nsofor, the CEO of Kora. Thank you very much. Nice to meet you, everybody. Nice to meet you. Okay, so we're going to get started by just introducing yourselves. We'll go from this way to that way so that the crowd can be familiar with you and what your company does. Thank you.
Okay, there's a mic. Yeah, good afternoon, everyone. My name is Temitope Adeyemi, co-founder CEO at PayU. We've built a solution, a mobile app that enables vehicle owners buy comprehensive motor insurance per minute. So what that essentially means is you could drive your car on the road and just pay as low as 70 kobo per minute for comprehensive auto insurance, 1 naira per minute for comprehensive auto insurance, depending on the value of your car. So that essentially is what we've built, based off of the fact that there are 12 million registered vehicles in Nigeria. There are just 2 million insured vehicles. So the remaining 10 million aren't insuring because they can afford that lump sum annual payment. So if people can get a solution where they pay 200 naira, 300 naira, 500 naira, whenever it is, they hit the road and they want to drive, and now that we're doing work from home and all of that, right, it just sits down well with the users we've had so far. Yes, so that's my name and what I do. Thank you.
Thank you very much.
My name is Segun Adeyemi. I'm the CEO, co-founder of Anchor. I used to run a company called Amplify Pay before Anchor. At Anchor, we are a banking as a service company. So what that means in very simple terms is we provide infrastructure and API for developers and businesses that want to offer financial products. So everything you need from the licensing cover to all the different endpoints. Basically, either you want to add a financial product or you want to build a new fintech from scratch, all the infrastructure you need to get to market very quickly is what we provide at Anchor. And I'm looking forward to exciting conversations today.
Thank you very much.
My name is Dickson, and I work at a company called Kora. And Kora is simply a Pan-African payment infrastructure, meaning that we build plug and play payment solutions that enable global businesses scale across Africa and enable local businesses to scale across the world. Thank you.
Okay, I'm Fehintolu Olaogun, CEO and co-founder of Credpal, and we're a consumer credit company that allows consumers make purchases and pay in monthly installments. We also enable merchants offer point of sale financing right at the point of checkout to their customers, amongst other services that we offer to both merchants and consumers too.
All right, thank you very much. I have a full fintech panel. it will seem. All right, so let's get into it. Embedded finance, where it is, and what it can be. My first question will be for Temitope. So embedded finance refers to seamless integration and provision of financial services within the offering of any business service to customers, just like the ride-sharing companies, Uber and Lyft, have successfully integrated payments, right? So what makes embedded finance different from white labeling? Sorry, before you take it, I would like Dickson from Kora to take it because you're in payments. So what makes embedded finance different from white labeling?
Yeah, they're very two different concepts. One of them requires a huge amount of technological expertise to go and fetch. Right. The other one is clearly what it is, embedded. It comes as a full package it's like without using technical jargons, it's like saying other than having to go to meet Credpal to access lending service, to go to meet Pay to access this one, you do like 1, 2, 3, 4, 5 integrations. If I eventually evolved to become a company that had embedded financial service as a sub-stack in my infrastructure, you don't have to go do all that integration. All that will happen is I'll just be switching it on for you, and in just one wallet you'll be able to do what Pay and Credpal can do. So that's kind of like the difference in the stack, and for me, I think that's what the future is going to be. Even for now, and for even in, let's say, 20 years time, because there's an evolving thing called IoT, right? Internet of Things, where one day this mic will have its own wallet and will be able to buy its own parts by itself, and will be able to tell the owners of this hall when its battery is down and when the services are down. And be able to take a loan by itself from Credpal and replace the battery from Alaba.
Right.
So in that kind of future, you would have to, at the end of the day, it's going to be embedded finance that's going to be able to run everything. And so companies like ours, you see, like we're still at the infrastructure stack of payment collection, because that's kind of like a huge problem that hasn't been solved. And then we have that stack of payouts, and then we have that stack of conversions. And I think when we're done solving all that, building financial service ecosystem is the only way to go, right? By making sure that we have stacks from various areas, from lending, insurance, to micro loans, to every, savings, all that, all embedded into our APIs, and then being able to scale up and optimize every merchant that uses our payment solutions.
Thank you very much. That's a very interesting future. Okay, so I will move to Temitope now. So Dickson has talked about how. Okay, so Dickson has talked about how embedded finance is the future. Literally everything is going to rely on embedded finance. My question to you is, what industries are using embedded finance now, and where do you see that headed in the future?
Yes, I think currently almost all industry use one form of embedded finance. Do you want to talk about logistics? Do you want to talk about the transportation? Do you want to sector? Do you want to talk about the lending? I mean, almost everybody needs to embed one thing or the other, right? And the future is just so clear that, I'm not going to have to come fill some 2,000 pages to apply for $1,000. Go through some crazy protocol to be able to access what I need to access as a user, as a customer, to move me to the next or whatever it is I want to buy, right? So the future as to embedding fintech products is crystal clear, and every touch point should just have some sort of embedded finance. Yeah.
All right, thank you very much. Quickly, I would stretch that a little bit. So this is for Segun. Payments, lending, insurance, and investment are what's getting embedded right now. Which of these do you think has more potential to like expand?
Yeah. So I think embedded finance comes in different dimensions, and the most obvious one is the payment part, because irrespective of what the business is, everybody needs to collect payments and get paid for their service. So we're going to see continuous growth on the payment side of things in terms of people embedding very natural ways to make payments almost invisible in their own customer experience. We've seen it done very well with the ride-hailing apps, at least up until they came into places like Nigeria, where some of the drivers will still ask for cash. But generally, the experience is supposed to be that payment is so embedded that you don't even know that it's in that experience. So we'll continue to see that growth, but also because that is the obvious and the most generic part of embedded finance, it is also the most competitive. Indirectly, almost all of us here, in some way, shape, or form, offer some form of payments as a service. So for me and for us, as a company, we are constantly thinking about beyond just the money movement and the payment. How do we create a better experience for our customers in terms of, can they embed, say for example, a wallet that basically is still linked to payment, but is a store of value that basically allows them to store value, where at the point where somebody wants to make a purchase or use the service, they can basically just take it from the wallet. So it's already taking it to the point of store of value. Then there's also the credit layer where, similar to what the likes of Credpal does and all of that, where you now think about it as, I already buy my groceries from this place. I already pay these people for, I already do my shopping here. When I need to top up, and it's the time where, I'm not very liquid, can they just offer credit in a very natural way? So it fits into that. So speaking specifically to your question, it's going to be more, bigger opportunities would come in areas like credit. It would come in areas like even insurance. There's a lot of use cases where it is possible, but it's just because it's not very obvious. So there's a lot more, thinking that needs to go into the design and the construct of the use cases beyond just what payment enables. And we're beginning to see a lot of companies focusing on that very vertical approach to, okay, we do purely, embedded insurance. There's a couple of companies in that regard. We do purely embedded credit. We have taken an horizontal approach because we don't think that the market is big enough to go purely vertical, but that's debatable.
Which of the market?
I mean, I'm not going to call it specific market, but it's at this stage where there's a lot to explore. Yeah. So there's a more horizontal approach where we still do payments, we do credit, we do wallet, and then some people who can think more deeply about the insurance space can then go a lot more deeper. So the opportunity cuts across, irrespective of, it just depends on what the customer is trying to achieve and which use case makes sense, because not everybody should embed finance just for the sake of it. If you can't find the use case, and that's what we preach in the team, if you have a conversation with a potential client and the use case is not clear for what you want to embed, you can't find it yourself, we can help you find it, then we should revisit the conversation. We shouldn't just force, you must do insurance by force, you must do credit by force. If it doesn't make sense for the use case, then you leave it.
That makes sense. Okay, so moving to Dickson now. So there's this saying that every tech company will eventually be a fintech company. Do you think that embedded finance is spurring that, or do you think it's in negation to that? Like, with embedded finance coming up, most companies don't have to actually actively think about the finance part. So do you think that every tech company will still end up being a fintech company because of embedded finance, or they won't be a tech company, or a fintech company rather, because of embedded finance?
Well, I think the answer to that question is, for me, I believe every company itself would end up, having a bit of fintech in them, right? And I'll first of all talk about, the part of what makes a fintech company. right? The good thing is that Anchor, for instance, is providing infrastructure for banking. So I'm a fintech company, but I don't need to provide that infrastructure myself, right? So it means that with more services, particularly in embedded finance, it means that it's easier for companies to launch products in weeks, right? That are actually competitive fintech products. I'll give an example. Starbucks, for instance, is a coffee conglomerate, right? Very big. But then on the background of that, they have a very, very powerful banking and wallet system, that in itself is even bigger than a lot of new banks out there. You understand? And another example too will be like even on the insurance space, which on the car side, right? So a car manufacturer, a very interesting one. BMW recently released an update where you have to pay for eating on your seat, right? So obviously the customers have some form of wallet or subscription, in their cars. So at the end of the day, most companies, and I would say every company that is forward thinking, should endeavor, I think, embed finance, right? The reason why they will end up becoming not exactly fintech companies, but having some fintech components is that it also has to be part of your business model, right? So for instance, BMW is saying that, hey, I'm going to sell my cars cheaper because I have a financing unit that is ensuring that guys are able to subscribe for heated seats, right? If maybe a perfect example, maybe you guys don't understand why they want to do heated seats, but in most geographies, and even in Nigeria, everywhere, right? Seasons vary. So why do I have to have an heater in my car consistently during summer? It doesn't make sense, right? So if I want to subscribe for eating, I subscribe for everything. Even your house, why do you have to have a house? Everything when you're traveling, you can always do something around that. So I think the key thing here is every company should have that fintech mindset, should build out some form of fintech model in their business, and that would kind of future-proof them and enable them to compete in the near future. And even when it goes into IoT, similar to the car too, my car needs new batteries and doesn't want me to stop on the road. The car does for the battery itself, which is fantastic. And but like I said, it has to be part of a business model. You can't just bring it out and just plug it in. It has to kind of be conscious, when the company to kind of embed that into their business. And I think that's what's going to make most companies end up having a lot of fintech embedded in them, and ultimately some might end up become just fintech companies at the end of the day.
Thank you very much.
You're
I really
welcome.
like that Starbucks example, because that's not something that we've seen a lot of people do in Nigeria here. But I always think of businesses that do certain things that repeat, and I wonder why they do not just have wallets that they can make a lot of money for. But just to still stay on you, I want to ask around, because Segun has mentioned something around how we'll start seeing more people using credit, embedding credit, right? So my question is that, what does embedded finance in credit look like? What is embedded finance doing for retail lending now? And what do you think it will do for it in the future? Is credit going to be taken, be the recipient of the embedded finance? Or is there a future where credit itself is going to be embedded, is going to be part of the embedded financial stack?
Well, for me, I think, and this was happening in mostly developed countries, right? Credit has gone beyond embedded finance. Credit is actually what drives retail. The reason why Apple is happy to release new phones every year, right? Entirely brand new phones every year. Your iPhone 12 is not yet bad, very functional, and then you use a new phone. It's because there's credit available for you to buy the new one. Imagine you have to shell out cash every single year for that new phone. They will not be producing phones every year. They will not be making as many sales as they're making right now. They won't be $1 trillion company right now. They'll likely be maybe 100 million or maybe 500 million thereabouts, right? So the Western world has found a way, most developed countries, which cuts across all countries that are developed, they found a way of ensuring that credit in itself is part of the retail experience. So I don't see myself buying a new phone. I just see myself swapping my phone, and I keep paying monthly for the new phone, right? For cars too, if you go to the US, you go to developed countries, you hardly see old cars on the road. Young guy out of school gets a car, brand new car, right? Uber drivers, are using the best cars, there's the best phones, they are every other person, there's no discrimination, no nothing, right? And that's because credit has kind of leveled that playing field. So we're just starting to see that in Africa and Nigeria particularly, and that's what we're doing or driving activity at Credpal. But the future for us is where a lot of other countries are, where credit itself drives, where like half of the entire economy is on credit. But then it's not bad, because really, I'm going to be using my phone for 1 year, 2 years, 3 years. Why do I have to pay in full for it at once? Right? I'm going to be driving my car for the next 2 or 3 years. Why do I have to pay in full for it? And then the I'm tired of the car too. I want to get a new car. Do I have to not go and look for another 10 million naira again to come and buy a new car? Like, it doesn't make sense really. And that's how the car manufacturers keep making new cars every year. They're creating new jobs. Like, credit itself is a very, very strong part of every economy. So for us, it's very fundamental that we get credit very right, because it goes beyond embedded finance. And that in itself, so just like payments too, our secret and payments are very, very tightly interwoven, because we also have to deliver credit on payments rails itself, right? So yeah, it's really driving embedded finance. It's one of the strongest drivers of embedded finance in most developed countries, and we believe that in Africa too, it's also going to lead the charge in the next couple of years.
All right, thank you very much. I'm going to deviate a little bit, and this is for you, Segun. So Anchor is mostly banking as a service, right? Now, there are people who argue that banking as a service is similar to embedded finance, but is not exactly embedded finance. As someone who is like active in the field, what do you think about this?
Yeah, so the two tend to get used interchangeably a lot, and that's very understandable. But I'll just try to clarify from my own position and how we think about it as well. From a banking as a service standpoint, it is really about seeing the bank as a platform and providing everything that is required to actually build a banking proposition. So you want to build a fintech, say you want to build a digital bank for ladies, just because you think there are special value propositions you can offer to them. And you don't want to now first go and get a license, go and connect to the switch, do all of that heavy lifting. Then that is where a banking as a service provider typically would come into play. And that is purely a banking as a service proposition. The fundamental difference where you draw the line between banking as a service and embedded finance, at least from my position, is when there's an existing primary offering. So as a business, you're not thinking, oh, I want to build a fintech company, or I want to build a banking proposition, or I want to build a financial service product as your core offering. But you already have an existing offering, or you plan to build an existing offering. So maybe you want to sell coffee and you want to now have wallets, or you want to open an e-commerce store and you want to embed credit, or you have a travel site and you want to embed insurance. If your primary offering is well set, but you want to add an element of financial services to make your user experience for your customers a lot more seamless, and also to drive additional revenue for you as a business, then that is embedded finance territory. And the most popular embedded finance all over the years has always been the payment part, because most people don't think about it as embedded finance because it's a clear, very mature category. So people say payment, everybody understands. You need to accept payment. There are companies that have built a lot of value globally and locally in that regard. But that is really where it starts, because you are not offering that payment solution because you want to offer payments, but because you need to get paid. So when you offer credit, it's because you want to make more sales, and then you offer it. When you offer insurance, it's because you want your customer to be protected. When you offer a form of saving or investment, it's because you want to create more value for them. You want them to leave their money with you. You want to help them save, and hopefully, you also want to be able to benefit from that value that you're creating for them. So really, that is where the distinction between banking as a service and embedded finance. I mean, there are a lot more nuances and details, but I think at a very high level, I hope that provides some clarification.
Yes, that does. And also, that leads me to my next question, which, Dickson, is for you. Like you said, payments is the most common form of embedded finance. It's probably the oldest as well. What has changed in the past few years, and how do you see that changing in the next decade?
What has changed in payments?
Yes, payments.
So if we look at
Let me just use the African context. Payments used to be a thing for the banks back then. Like if you saw people who were in school like 1990s, 1990 something. So you had to go to the bank and pay the school fees and carry your teller and go to the school bossa, they call it bossa then. Then you drop the teller. And then InterSwitch came along. Then they started this e-pin thing. InterSwitch e-transact. I just found out that he was in Amplified Pay as well. So they were, I think, maybe like the next generation before Flutterwave. So InterSwitch came in and started this whole e-pin thing. Then they now eventually went to build IPG, that's like the gateway. So they pioneered that, right? And we started accepting payments online. One of the most, worst, like, I know they are here, it's one of the worst experiences you could have. And that's why people like Paystack exist. Because Paystack came in and they just evolved that whole developer experience for integration. They made it so seamless that you could sign up same day, integrate same day, and go live same day. And then we are like, I think we're like the fourth generation payments companies that there's the Paystack, Flutterwave, Amplified Pay, Vogue Pay, those were earlier than us. Now what changed in our own era is we stopped being, if you look at what Segun said, companies will be like Credpal, and companies will be like Credpal, and they want to just only accept payments, right? So they just wanted a payment gateway to pay them through. And then in this new generation of payment companies, we went beyond evolving from tellers to being a payment gateway to then going to something called Fintech as a service, right? So we started making a step forward to say, look, other than you just accepting payments through our gateway via a checkout, why don't you just integrate kind of like our wallet or like kind of like this user ID? So which means that we want to serve you all fintech products are available in the market via this ID. So if you integrate this ID, you get payment collections, you'll be able to pay out. Eventually, you'll be able to get multi-currency, you'll be able to swap, then down the line, you'll be able to do other things. So payment companies are evolving from being a one company thing to become a distributor for embedded finance. So the only reason we even exist as a company, Kora Pay, and we could penetrate this market is because those generation 3 payment companies are not offering distributed embedded finance, which means the APIs that I have that companies like Paystack would never dream of having, because it's not their core. They understood how to just accept payments and pay out. But then we've gone further to say, look, integrate this wallet. This wallet will enable you to accept payments. It will enable you to eventually access loans. It will enable you to even do KYC for your users. It will enable you have pounds, euros, dollars, Kenyan shillings bank accounts. It will enable you to swap currencies between NGN, ZAR for different markets. So I'm saying that the people who are going to win in the next 5 years will be fintechs that are embedded finance distributors, right? And in our own position as a payment aggregator, we have thousands of merchants. And if we integrated a loan company, it's just boom to 1,000 companies. For instance, let's say GIG, God is Good, has been using our wallets, accepting payments. Eventually, God is Good can now scale into Kenya, South Africa without any extra integration, because what? We are distributing multiple financial service products. If we thought about doing digital insurance one day for the people who are ordering goods through God is Good, it's just also going to be just switch on the back end, and that's all. So I think the winners now would be people that it's not just payment collection. I just help you accept payment online. It's what about the other financial service ecosystems around? Like, I have a problem with KYC. How can you solve it? I have a problem with XYZ. How can you solve it? And so I think that's the evolution of payments in Nigeria. Right. Thank you.
Thank you very, okay, thank you very much for that. But that also leads me back to Segun. And circling back to banking as a service, do you think, because he started out explaining how in the beginning you have to pay, like you went to pay school fees, you have to go to the traditional bank, make a deposit, take the teller, go and give it to your bursary at the school and all of that. Do you think that banking as a service would empower traditional banks, or do you think that it is going to disrupt them? How do you think traditional banks would accept banking as a service?
I mean, the good thing is that some of the traditional banks today have been very open, and they're actually some of the enablers and partners for banking as a service in Nigeria today. So it will definitely enable them, but it is largely dependent on the strategy of the bank and the way they think about the opportunity. So they can either see it as a threat or they see it as an opportunity, and that mindset really shapes the strategy that they take as an institution and how they would participate in the future of embedded finance and banking as a service. So for banks who see it as an opportunity, what they then need to do is position themselves as the platform, as the go-to platform for companies like even Anchor, because for us, we are going the complete route where we start from the licensing to actually providing like the full infrastructure. But there's still a lot that we can do just because of our size, our scale, our market approach that we still need to work with the traditional banks on. So the ones who position as a platform and see this as an opportunity are open, they're looking to collaborate, they are investing in the technology that would enable them to be able to participate, because that is critical. Because for you to have an open banking or embedded finance market, you can rely on the legacy systems that a lot of the banks have. So they need to make investment in technology for them to participate. But if you already see it as a threat, as opposed to investing in the technology that would help you build a platform to participate as a bank, you're building protective solutions to try to compete with people that can essentially distribute, and you can have revenue share and all that. So it can be both, but I think from what we're seeing in the market, a lot of the banks here, and even from global examples, a lot of banks are beginning to open, and it would actually be a driver for, it would be an enabler for the banks and not necessarily make them disappear. Maybe they will be less visible, and maybe some banks don't like that. Because if I can get my financial services from Credpal, from Jumia, from all the services I use, it might be there might be some GTB play somewhere, but I won't have, GTB will not have that personal relationship. And of course, that's for some banks, especially the big retail banks, that is something that they don't like. So it's really about, it's like the game theory of, how do they approach
One
it.
thing, they don't want money.
Exactly, exactly, which one do you want? So yeah, that's really how I see that evolving, and how it's been evolving so far.
All right, thank you very much. If there are any questions in the crowd, you can just write them in a sheet and pass it to the tech point guy over there. I will be taking questions after my next two questions. Okay, so this last question, or this rounding up, almost getting to the last question, is for you, Temitope. Is there a future where embedded finance beyond payments become adopted by non-tech companies? Or is this something that's going to be really niche? So we've talked about how Starbucks, for instance, have put like a wallet system there. All those things are still somewhere around payments. Where do you think like things like insurance and just beyond payments, like do you think that this is something that non-tech companies are going to adopt at some point? Or do you think that this is really a niche thing, really a niche service?
Yes. So I think it's not going to be niche because, like Fehintolu, right, mentioned earlier, and of course what BMW is doing, where BMW is not a fintech company, right? They are car manufacturers where you actually need to subscribe to pay for car seat heating while during winter, right? So I very much think that this has come to stay, right? As even commerce evolve in Nigeria, small business, SMEs evolve in Nigeria, at every point in time, people would want to receive their payment other than cash, right? People don't want to be carrying cash around, most especially these days where, especially these point of sales terminal guys, where they get robbed and all of that, right? So everybody's just looking for more efficient, effective ways of collecting payment. And I just wanted to touch up on something. I mean, you asked a question and you were asking which was going to go bigger or something grow bigger, insurance, fintech, payment collection, all of that. So I usually have this conversation with some of my colleagues within the insurtech space, and my talking point is usually that insurtech ought to be bigger than fintech. You ask me why. So which means insurtech is supposed to grow bigger at the long run than even payment collection, payment here and there. You ask me why. Fehintolu needs credit life. We're currently building a solution at PayU that guarantees repayment to buy now, pay later startups. He needs some form of insurance, right? And every fintech you see around do need some sort of insurance, right? So in the long run, you realize that insurtech, insurance probably would have like that cover, that guarantee over payment collection startups, which we call fintechs, right? So which has potential of eventually growing beyond what it is currently, right? Because like what we're doing at PayU, where you can essentially pay as little as ₦1 per minute for comprehensive auto insurance, essentially paying as, right? The product is also coming out, pay as you go goods in transit, right? Somebody is moving a parcel from Ikeja to VI. It does not have to pay you monthly or annually, like premiums are collected right now. Just that one trip, you can pay 20 naira, 30 naira, right? So the potential is really, really big on the side of insurtech, so I'm always fighting and rooting for that space. Yeah, thank you so much.
Yeah, thank you very much. Okay, so this last question will just be like a minute. Everybody here has talked about a future, more things that they see that embedded finance can do. What is your number one strongest trend that you see with embedded finance in, say, the next 5 years, 6 years? I'll start this way, since I started, this is what we introduced. Thank you.
Well, so in terms of a trend, like I said earlier, I see every single layer of embedded finance, right, being a part of every transaction. For instance, I'll start off with insurance. Like you mentioned, we have credit life on every single credit transaction. Also, even we as a company, we're insured, right? And every single thing the customer buys. I'll give an example. You have a very beautiful phone, right? But then I doubt if you have an insurance cover to protect against damage. But imagine you got... so imagine why you were buying that phone, everything just came out of the box, at a very, very small fraction, right? That in itself would be a better world for you, but then sadly you can't go every way to control all of this. So I think as we get better APIs, as people get more innovative in the space, the key thing is it must be very silent and it was non-intrusive, because customers don't want to. And the same thing with credit too. When we started out credit, like a lot of people know there were loans, but if I want to buy a smartphone, I won't go to a bank, borrow money, then I'll go to the next shop and go buy the phone, right? But because I can buy that phone and pay in installments at the point of sale, it makes more sense to me. So the more we're able to build natural experiences for the customer, right there when they're trying to do that transaction itself, all in at very low costs, then that means that every single product will be layered on it. So yeah, in the future, there's going to be a whole lot more embedded finance. Customers might not know, but it's going to be a better world because customers are better protected. have faster and easier payments, our credit to make real-time payments, so there's no need for you to think of, oh, I'm broke, I don't know how to buy this thing, right? It just becomes more seamless, faster, and people are generally happy and happier in life.
Thank you very much.
You're welcome.
So before I touch on it, I'll just retweet you and retweet him again. About that insurance part. I strongly believe in that business model because I went one time to rent.
Thank you.
I went one time to rent a truck, and it was a 1-hour ride. And the ride was I paid for the whole thing, maybe like $100, and then they now told me to opt in for $15 insurance or not. And then I opted in for $15.
Is that your?
U-Haul, exactly. And then opted in for $15 insurance, and then I went, of course now, I drove anyhow, bashed on site,
Right.
and then $15 covered for the repair of almost $1,000.
Right.
Problem is just that our culture doesn't support it. You see, our culture is we don't have maintenance culture, and people always, we look for short corners every time in Nigeria. So I think maybe in the next, it's going to take time, but I think that business model is really great, and eventually everybody would have to deal with insurance. Anyway, now on the final bit of it, there's this ice cream they sell in is it Domino's? They call it Oreos overload. So I think we're going to have fintech overload very soon as a recipe, because in a not so far time, I promise you see Credpal telling you, you know what, you can borrow, but you can also borrow to invest on Credpal. And then in a short time, you see, so you like GIG so much, they say GIG, they say you can pay for logistics, but think about it. How about you being able to insure the logistics through this and the XYZ? So there's going to be fintech overload. Just the same way there's banking overload, there's like 25 banks. And then at the end of the day, I think every single application will have that crisscross fintech like choking you. Eventually you'll be on a dating app, and the dating app will be telling you to do things with your money, I can help you withdraw, I can help you send money to Canada. So I see that part coming, and everyone's going to get bogged out, you understand? But I think after that's where you have what they call the tipping point. So like the same way everybody's talking about Bitcoin's crash now. When it rises again, everybody will jump. Then you now have the tipping point. So at the tipping point of that fintech, I think what's going to happen is that at that point it will penetrate every single area of the market, just the same way laptops did with Windows building an OS, and every other person carrying the OS, Acer, Compaq, HP, everybody. So I think that's what's going to happen. And we were on a race to zero at Kora. We're racing to be the core operating system like what Microsoft did for every single application. We want fintech overload to happen to you. And at the point where there's just fintech overload, at that point we know that we've hit critical mass, and the tipping point is coming for like proper serving the underserved market, properly. And then I think that's it from my own side.
All right, thank you very much.
Yeah, that's very interesting, because I absolutely agree with you, Dickson. I can't even, but I think the way I think about it is more of rebundling. The thing before is everybody would say, oh, I'll build savings app, investment app. Now everybody's adding everything back, because people are looking for market share, people are looking to grow, if you've gone to raise money, you need to go into the valuation and all that. So we're going to see more. A lot of rebundling is going to happen. And it's going to get to the point where it will now be, just like you said, the tipping point where it's the survival of the fittest, and people will really have very clear value proposition and can stay. And really for us, even now, when we're looking at partners that we want to work with and companies we want to work with, we are also making bets. It's like we are VCs. Because I'm like, will you be able, in my head, I'm thinking, will this company be able to raise money? Are these guys going to be able to grow this thing? Because we want to be, the platform in which these companies are building on. And we want to bet on the right horses. We want to bet on the next generation of, the fintech leaders and the platforms that would drive the greatest value for customers. So
there's a bit of that picking, even though it's subtle, that happens in the process. But we are going to see everybody will bundle everything. So I'm fully in alignment with Dickson's position as well.
Yeah, these guys have killed it, so I don't think they left anything for me to say. But I want to touch up on your experience. Insurance is that's my area, right? So I remember I also paid for the use of 4 hours of your in Indiana, and that was my first experience of essentially pay as you go, right? So and that was what formed what we were able to come back home to build. So for me, let the tipping happen, let whatever happen. I just want to build a company where we can have the shoulders of fintech startups. So you want to crash into pay you and still deliver value to your shareholders, right? I want to be able to provide that backbone for fintech companies, right? Where we know the unforeseen that can happen to you, or you bring those unforeseen to us, and we are able to, as a matter of fact, build custom solution that fits what you're doing. Same with just like the partnership we have with QuickBoss, to be more specific. They came with what they want. We went in there, built it. They were wowed, right? So what we're trying to do is we're trying to make sure the insurance industry the insurance space can care for you guys, fintech guys, right? So that's my beat, and I look forward to engaging with you guys in the near future. Thank you.
All right, thank you. So some questions have come in. If there is enough time after these questions, then people will be able to stand up and take their questions. So you can just identify, and then the mic will be given to you. So there's a question for Dickson here. As an aggregator or distributor of fintech services, how have you approached or prevented being cannibalized by service providers and vendors, seeing as they own the service that you extend to your customers?
They must chop you. That question is so funny. They must chop you. They have to. There's no way out. So let's start with how we started. We started first by, when we wanted to start, there's a huge barrier to doing payments in Nigeria. Even, I'm sure Segun will be able to tell. Even banking and services. To first launch your payment infrastructure, you need a CBN license. The cheapest one is 100 million. Then there's the one of 1 billion, then 2 billion, if you want to, depending on the kind of money you have. So if you're starting out a business, young guy, where do you get 100 million from? You don't have that money. So the best thing to do is to go and pally up with maybe the CEO of somebody, maybe in this situation you can go to Anchor. Just pally up with him and say, bro, how far? I beg, let me just use your infra. And now there's something they don't allow called layering, meaning that if I'm going to go and onboard 5 people separately, I'm not supposed to go to him to take API. It's layering, right? Because he's supposed to know those 5 people directly. So of course, you go package them, then you go and meet him. Take the API. He will screw me at the beginning. He will charge me the normal 1.5%, capped at 2,000 for the payments. That's what it is. Then we go back and go and meet your customers and say, look, I have the best pricing. I'm integrated to Zenith Bank, GT, Providence, even the US Bank is coming. I will charge you 1.2%. You start with a loss. You understand what I mean? Then when your volume comes up here, you then go back to me and say, bros, Haba, InterSwitch has given me 1.0. This stack is giving me 0.9. I'm not sure I'll deal with you. I'll switch you up tomorrow. You now come down to 1.0. Then you now go. So that's how we started. You understand?
Yeah.
And we took a loss for a while, and then we juggled both sides till we became profitable, and then we gathered the money to then show that, look, this is what we can do. People trust us, and then we paid the capital. then. So that's why it's been a slow journey for us. It's like 4 years plus, 5 years plus to get to where we are. And yeah, so just know that that's your dream. Come to me, I will chop you small.
All right, thank you. So anybody can take this one. What crucial role does the regulators play in the type of service and experience that financial institutions provide to the users? Who would like to take this? Okay, so let me appoint Segun to
You know, I'm sure there's a reason people are avoiding that question, because you have to be careful. You don't know who is listening right now. So anything that has to do with regulators. But, you know, there's, you know, as much as we can joke that everybody's going to be, there's going to be fintech overload. The truth is that it also, you know, there's a lot of responsibility that comes with handling people's money.
Yeah.
So the regulator actually play a very critical role in terms of, like, you know, your offering. And you know, there has to be some sense of like, you know, things that you just have to put in place even before they even come for you. You know, when you're starting, nobody knows you, you are doing some small thousands, the regulators might not come. But the thing is, even when you scale, there's something called, you know, lifetime audit, where they can audit you backwards. So all those things you thought you gotten away with might still come to bite you. So regulation is very critical to the type of service, and it actually even defines the kind of service. So you have to be careful with, if you're partnering, what kind of license does the partner hold? What is the language that you're using? I see a lot of, you know, people saying they are, you know, a digital bank, and they're basically just offering like very high level virtual accounts that the actual bank might not even know that they exist. Yeah. You know, so those, and then they will go out and offer it as though it is NDIC insured, you know, CBN approved digital bank. So things like that, there's a significant knowledge gap, and you know, even if you get away with it in the early days, I just think if you want to play in the space, you have to just invest in the knowledge to understand that this is a regulated space, this is people's money, this is you know, it comes with a certain level of responsibility. It's not child's play. And then when you have that mindset, and then you have that understanding, then it makes it easier for you to engage and also position your product where, even if you can't afford the license yet, you know the kind of partners you need, you know the kind of approvals you need, you know the kind of indemnities you want your customers to sign. Just put things in place that anybody that comes to check, you say, yes, we don't have our license, but look at this letter from this person, look at this cover here. So at least, you know, the regulators will be like, okay, these people, they try small. So yeah, that's...
For the regulator in my space, I'm sure maybe one or two people will know what NICOM is, right? Those guys are really trying these days, in the sense that they've seen that, I mean, the regulator have seen that the way forward is just insurtech, right? I mean, we keep shouting insurance penetration is below 1% or at 1%, and for, well, I've been in the industry for 16 years, right? And people have been there for 4 or 5 decades. They still keep shouting lower than 1%, right? So they have come up with even solutions to build insurtech startups. There was a Bima lab that just got concluded about 4 or 5 months ago, where people were innovating around insurance products, were brought together. I mean, it was a NICOM organized thing. I mean, I was so like shocked. Yeah, shit. I mean, NICOM, insurtech. Oh, it was great, right? So, what NICOM has done is provide support. Like right now, I can just walk into NICOM and I have someone assigned to pay you for whatever thing we need, regulatory, documentation, whatever it is. I mean, awesome, right? So, because really, like I always say, insurance is like the future of fintech. We want to be able to protect everybody. So you guys are welcome to the insurtech space. We need more innovation around that. You know. Yeah,
okay, that's very interesting. Okay, so this question, I believe that they must have been directing to you. Does credit actually work in Nigeria? Looking at the fact that there is no functional credit bureau system. Is that right though?
I think it's wrong. There's a functional credit bureau system. Credit does work. The first thing is that maybe if you're performing very well, you may not get reported, but trust me, if you default, most lenders are going to report you. And that in itself is a good first step. So it's working. The only issue, not the only issue, like one of the issues though, is the fact that education is very important and it's still very low in the system, and also defaults people don't take defaults seriously, which could end up biting you. Like we've seen a lot of our customers who defaulted, and then some will default for like 1 year, then suddenly they just call us that, hey, I can't take any loan from any bank. Why? Because you reported me. Like, you have to pay, and then they have to pay after about a year, right? But then education itself would have prevented that, because they understood that they're living their lives for a very long time, right? So you can't do something wrong and then just expect that you magically be forgiven. You get so it's evolving. The space is evolving. It's a very, very active and fantastic space. Like I said, for me, it's the future of growing the economy, because without appropriate credit, you can't grow the economy. So we don't have a choice. Everyone has to make it work with the players in lending, and also the customers to be able to become more responsible. Don't take what you can pay back. You just can get a little more responsible. And I believe that on the long run, the ecosystem is going to mature and become as evolved as in developed countries.
All right, thank you. As someone who runs a credit company too, I just want to say that there's a functional credit bureau system, and if you are not paying back, you'll be locked out of the system. So it's better to pay back. Okay, so this last question is: cash is the #1 guide we are fighting. What is the possibility of preventing the flow of physical cash in a low trust environment like Nigeria? So who will take that question? Okay. So Dickson, I guess it is down to you. Oh, okay.
Okay. I'll be short, so we'll share it. So, there's some things you just can't fight. There's something they call an uphill battle. So an uphill battle is like, it's like pushing a stone up the hill, knowing that if you stop pushing it, will roll and crush you, and sometimes you just wait and pray that thunder will strike the hill, and then the road will pass. And that's what I think cash is in low trust societies. Like, there's nothing you are telling Mama Nkechi selling pepper that she will hear, that you are paying her for that pepper cash. Now, we understand that China was in the same situation 20 years back. But this radical change from cashless society to cash-based society to cashless society takes time. It takes time, and the factors are not because there is no infrastructure or there's no tech. Things like education, adoption, social cues. There's like so many things, and that's why Steve Jobs always says something, that one of the best things to happen to humanity is death. It washes away the old and ushers in the new. And I'm not saying that like till some people die. I'm just trying to say that look at the education level of our parents against ours, right? Social media could only take off and smartphones could take off because it was like us, like we. And then imagine when our kids are going to be there. So we're going to be at a point where we would be our parents' age then. And at that point, what are you doing giving me? I don't even have cash, like now. And at the point where we're going to be like 40, 50, 60, I promise you at that time, Nigeria will be phased from cash, because in the future, the paper sellers then will be online, selling it on Instagram. And they're going to be collecting the payments online. They'll be using kata.com, and then probably someone will create a Shopify for Nigerian market women that you just go in and you just tap and move. So that's what I think is going to happen.
So to add to that, one country that is very interesting that answers a lot of these questions is Kenya, right? If you go to Kenya, their ATMs are dead. Like ATM business there is, even POS in and out is almost gone, right? And so you have to do mostly M-Pesa particularly. And so one thing is Nigeria is a bit slow in that regard. One thing I feel is going to be a very, very strong driver to that is building more motivation for people to actually use it, to use cashless systems. That is what everyone keeps thinking about. For us in credit, you can't get credit as cash. No one is giving credit as cash these days, right? And even the smaller MFPs are starting to adopt at least mobile bank account with them. They must overlap apps now, so money is going to you through the app and not over the counter as cash, right? So I think the first thing is building a lot of motivation around it. Credit by default is almost on that side, and then the next thing will then be, how do we kind of like get that paper seller off taking cash? And one thing we've seen that has played out in more formal structures is the fact that a lot of people before now would not accept transfers. That was like 3 years ago, but now they are forced to accept transfers. So the good thing is that because of that, people like Kora now built transfer infrastructure, so you can just pay through transfer, you get exact amount, it goes to your account. So this demand from customers to the paper seller means that imagine you're in a market and you now put up your own, I accept transfers. Trust me, after a while, everybody will start accepting transfers too. So it's going to evolve, it's going to get there, but it might take a bit of time. But trust me, eventually it's going to get there. Sure.
Yes, I agree with you. This morning I had like a wardrobe malfunction and I had to fix my clothes quickly. The person who went to fix my clothes was a madam, and I was like, I don't have cash. They're like, madam, I accept transfer. So I guess we're getting to that point where it will be that way. So we have one question in the crowd. So we'll just take that, and I guess that will be the end of the panel.
Yeah, afternoon everyone. You did justice to some of my questions. In the era of, you see telcos are getting the PSB licenses and the rest. And we in the fintech space, should we be troubled, or how should we position ourselves? We're talking about embedded finance, and a lot of it boils down to data, having proper data of people you're serving. Like an MTN has over 100 million subscribers in Nigeria. So they are well positioned, they have money, they have they can easily build infrastructure. So how should we see it as a threat? And if it's not a threat, how should we position ourselves? That's number one. We can take a cue from M-Pesa play. That's number one. Okay, the second one, let me just summarize. So what's the best? I see most fintech, we only service the bank. Many people are trying to talk about financial inclusion, but really, we are not even scratching the surface, banking and unbanked. We're talking of embedded finance now. What's the best channel to build products, services, to actually service the unbanked? Thanks.
Okay, thank you very much. So please taking the first question and who will take the second question? Okay, so Dickson for the first question.
Take the second.
Yeah, so just
MTN, run. So don't try to play Jackie Chan with your small fintech. And this was again part of what took us so long, was we are trying to also form superhero. We're going to beat this person. 100 million SIM cards. Momo is rolling out. What are you doing there in that space? Run. Go and look for how you will just lay out. We, Kora, we ran. And we're just looking for how we'll integrate Momo as a service in our this thing, because there's something called infrastructure, like electricity piping, and that infrastructure of electricity. For payments, Bet Niger shops, those like offline are the true, like what he was talking about M-Pesa. There's been a reason why M-Pesa is Kenya is the only place that worked. I can't say that one on this camera, or another day, you can visit me. But it will not work in Nigeria, when we know that. If there's a reason it worked there, it will not work here. So it's only time that might help us here. Now, if Momo is going to roll that out, and you have a fintech, just go and start start looking for who works in Momo. Guy, I beg, give me API. You integrate the API into your solution. You enable people to accept payments, and then you start bragging. We now have 150,000. We have 150,000 new cashless points to receive payments from. What's the name of your fintech, please? Imali Pay. So you say now Imali Pay can now receive payments for unbanked and banked people, and you just roll with that by help push transactions through Momo. Just help, and that way you are out of the way. The small cash you have will not be crushed, and you'll be doing good business.
Yeah, that makes sense. Thank you very much. Okay, so please just a minute as well.
So in addition to what he said, right? So the good thing is that unlike what happened in Kenya, there are a lot of things that, like you said, you can't see on camera, right? But one thing that we should also look at is that the regulators have kind of like helped a bit in that regard, because it's easy to build monopolies when you have access to everything. So most of the PSBs cannot give out credit, for instance. There's a restriction on how everybody can do with the money they're getting. So what will make sense for you is to find a way of partnering with them and then bundle your service. So they're going to be more open to partnerships because they can't do everything, like some cases. Even the banks have to sell off their insurance businesses and all of that, so because that's on bundle, right? So to develop into, I think regulators are also kind of like proactive in that regard, because you want to create more competitions so that you can get more people that specialize that can enable other services. Yeah. So while you are scared of MTN, look for ways of you can partner with them. Look for those things that they cannot do that you can do very well, and go sell to them. And hopefully with time, they will accept that, and then it's going to be a better place. So don't look at it as a threat. Look at it as an opportunity.
Yeah, that makes sense. So even in places like Nairobi, where M-Pesa is very popular, I went to Nairobi recently and I saw Nairobi is trying to do like this, M-Pesa is trying to do like this buy now, pay later thing. And they're partnering with someone. They're not doing it by themselves. So there's always like that space for partnership with people, I guess.
Yeah, there's an angle to the first question that actually links back to the second question, because the truth of it is hard to do financial inclusion because of the structural challenges. That's just the reality. It starts from education, identity, we don't even know for sure how many people we have. So as much as the PSBs can be a threat to fintechs, they can also expand the market because they have the reach, they have the distribution, they have the funds. They can invest in things that we the fintechs cannot because of their size. So the people that the first account or formal transaction financial service they would have would be their Momo wallet. And when they come into the ecosystem, they see what is possible. Then they can get access to credit. At some point, they can do buy now, pay later with Credpal. They would accept. So they actually also help to grow the market. So as we are thinking about them as competitors, we should also see them as partners in actually expanding the market, which speaks to the second question you asked around how do we really increase financial inclusion. The thing is, everybody has a role to play in making that happen, but it would, just like going from cash to cashless, it would take time, but you do both. We do everything we can as stakeholders, as fintechs, be that, as bars, we have our own role to play, as pure payment enablers, there's a role. But then the regulators also, there are a lot of things now. That's why there's a tiering system for KYC, where there are people that cannot access, they don't have passport, they don't have driver's license and all of those things. You say, okay, do they have voter's card, or they just use their phone number at least as a starting point? And later, if they want to do more transaction, it shows that they have more money now, so they want to do more. Can they invest in going to get higher KYC level? So there's tier 2. But those are initiatives that can be enforced and driven by the regulators. And that's how they can contribute by coming up with such initiatives, ideas. So everybody has to, even, I had the case where, someone that I needed to send money to often, and then the person would tell me to send it to an agent's place. And I'm like, after this particular time, it's a relative. Like, if I want to send you money, you have to give me your own bank account. I'm not going to send to an agent for you to go. So somehow she's like, it's stressful. I'm like, I don't care. I need an account with your name so that you don't have to disturb me
that I have to send it at a particular time because that's the time you'll be with the agent. I'm like, I want to give you money, you're still stressing me. Like, you know, so, and the person now has an account because there's enough incentive to actually make her go do that because, you know, she wants the money and she's in a far place, but she has actually done it. So we all just have to see like, okay, where can I participate? What role can I play? And, you know, we would all then just enable financial services over time. So, yeah.
All right, thank you very much. I believe that we've had like a very rich conversation here. We will be bringing the panel to an end now. I hope that you learned a lot. And if you want to connect with any of the panelists, you can do that out of the panel. Thank you very much.